Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 14th of February 2016 and we're providing an update on an alternative reason as to why China has been selling US dollars. We have frequently heard pundits claim that they're being sold because of fear of the dollar's imminent collapse. We also hear that China plans to replace the dollar with the yuan as the new world currency. Now, frankly, when we raise this with economists, they simply laugh and do that sign many make with their finger circling their temple when they believe someone is just a little barmy. So what is the real truth as to why China is selling dollars? Well, we can at least give you the official explanation, and you can make up your own mind as to whether you believe it or not. First, a little background. Until 2005, the value of the renminbi or yuan, and we shall use the term yuan from this moment onwards as it's easier to say, was pegged to the US dollar. As China pursued its transition from central planning to a market economy, and increased its participation in foreign trade, the yuan was devalued to increase the competitiveness of Chinese industry. Since 2006, the yuan exchange rate has been allowed to float in a narrow margin around a fixed base rate determined with reference to a basket of world currencies. The Chinese government has announced that it will gradually increase the flexibility of that exchange rate. As a result of the rapid internationalization of the yuan, it became the world's 8th most traded currency in 2013 and 5th in 2015. The yuan will be included in the basket of currencies used by the IMF reserved currency, the SDR, later this year. In August 2015, Beijing decided to tweak its exchange rate peg with the dollar, making the yuan float in a wider band against the greenback. But the devaluation in itself was small. Allaying fears further, the Chinese began to immediately intervene to prop up the yuan to stop it falling too fast by drawing down their reserves. Against this backdrop, investors became and are becoming uneasy. The country's export performance has disappointed, while the dollar has strengthened, notwithstanding what has happened during the past week or so. In response, on the 7th of January, the authorities lowered their daily fix against the dollar by 0.51%. This was the single largest move since August and set off a new bout of mass stock market hysteria. Overall, the yuan has weakened by around 10% against the dollar over the last 2 years. However, in a recent interview published in the Cake Scene Financial magazine, Chinese Central Bank Governor Chu Xiaoshuan has accused speculative forces of targeting the country's currency. He said, quote, "International speculative forces have recently focused on shorting China," unquote. He added that there was no reason for the yuan to keep depreciating in value, and that China would not let international speculators dominate market sentiment. There is little doubt that investors have been trying to pull funds out of investments priced in yuan, and speculators have been betting on further falls in the currency. To stabilize the situation, China has been selling dollars and buying yuan. In January alone, the reserves fell by $99.5 billion. It has also been using other tactics, including curbing currency speculation and ordering offshore banks to retain their reserves of yuan. However, these defensive efforts have come at a cost: the erosion of China's foreign currency reserves. Many commentators have made large of the fact that China's dollar reserves fell by a considerable $420 billion over the past 6 months, and now stand at their lowest level since May 2012. However, they neglect to add that China is still holding some $3.2 trillion in foreign currency holdings. Governor Chu dismissed fears that China's currency reserves were declining too fast, saying, "It is normal for foreign reserves to rise and fall as long as the fundamentals face no problems." The Chinese economy posted growth of 6.9% for 2015, its slowest rate since 1990. Fears of an economic slowdown have caused some investors to move their money out of China in search of better returns elsewhere. The Chinese authorities actually fear a rapid devaluation of their currency, as it could destabilize their economy. Many Chinese businesses hold debt in dollars, and managing those debts with a severely weakened yuan could cause problems and some companies to fail. So China has been trying to engineer an ordered devaluation of the yuan, but that admittedly is proving difficult to deliver. The People's Bank of China has said its main exchange rate target is against a broader basket of currencies and is not fixated on the greenback. The PBOC has repeated this claim again, saying that it is happy to let the yuan to dollar rate have a more, quote, market-determined value, unquote. It wants to ensure that when measured against a wider basket of currencies, which includes sterling and the yen, the yuan remains stable. The Communist Party has responded to mass capital outflows by using the full force of the state to punish those it accuses of illegal cash transfers out of the country. Some claim that the Chinese are beginning to lose control over their exchange rate and their economic policy. China's exchange rate policy, it could be said, has put the country in a bind. There is no doubt in our minds that the Chinese wish the yuan to become one of the world's leading currencies. There is also no doubt in our minds that it will not wish to jeopardize or in any way harm the prospects of its SDR inclusion. But where we do have doubt is when we hear the conspiracy theories that they are dumping the dollar because of their belief that it is on the verge of imminent collapse. As with any portfolio, overexposure is never a good idea. And perhaps, just perhaps, there is a little truth in the fact that it does make some sense that to prevent the further demise of the value of the yuan and thereby retain internal investment, it is perfectly acceptable for the Chinese to sell dollars and buy back its own currency. Whether you agree with this or not, at least we have been able to put forward an alternative opinion to the one that appears to dominate the airwaves, by those perhaps talking up panic about the dollar's imminent demise. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.